Establishing a new business can be challenging, but it can be simplified by breaking the process down into manageable phases. You can use the tried and true strategies of business owners who have achieved success, rather than circling around in circles and speculating about where to begin. Follow this 4-step checklist to turn your business idea from a bright idea into a functioning company if you want to learn how to start your own. Step 1. Make your concept better. If you're considering launching a business, you probably already have a notion of the kind of products you want to sell online, or, at the very least, the target market. Find current businesses in the industry of your choice with a quick search. Find out what successful brands are doing now and how you may improve upon it. You have a good idea and are prepared to write a business plan if you believe your company can offer something that other businesses can't, or if it can offer the same thing, but quicker and at a lower cost. After you've decided on an idea, you should ask yourself these crucial questions. What is your company's mission? To whom are you selling? What are your ultimate objectives? How are you going to pay for your initial outlay? An effective company plan will address these issues. New entrepreneurs sometimes make a lot of blunders because they move too quickly and don't give these parts of the business enough thought. You must identify your ideal clientele, whom will purchase your good or service. If you can't uncover any indication that there is a market for your idea, what would be the point? Creating a business strategy requires extensive market research on your industry, as well as the demographics of your target audience. This entails gathering feedback from focus groups and surveys, as well as looking at SEO and open data. As you put together your business plan, it's a good idea to think about your exit strategy. Coming up with a plan for your eventual exit from the company compels you to think ahead. A business plan aids in determining your company's direction, its means of overcoming obstacles, and the resources required to keep it afloat. Use a free template as a guide when you're ready to write. Step 2. Evaluate your financial situation. Any business venture includes initial expenditures, so you must decide how you will pay for them. Will you need to borrow money, or do you have the resources to finance your startup? Do you have enough savings to last you till you turn a profit if you decide to quit your current employment to concentrate on your business? Find out how much money you'll need for startup. Because they run out of money before they make a profit, many businesses fail. Since it may take some time for the company to start generating steady revenue, it's usually a good idea to overestimate the amount of initial capital required. Analyze the break-even point. A break-even analysis is one method you can use to figure out how much money you need. This crucial component of financial planning aids entrepreneurs in figuring out when their firm, good, or service will turn a profit. The following are the top 3 justifications for performing a break-even analysis. Calculate the profit margin. Generally speaking, this is what every business owner wants most. How much income must I produce in order to pay for all of my expenses? Which goods or services are sold at a loss, and which provide a profit? Put a price on a good or service. Most individuals think about how much it costs to make their product and how much their competitors are charging when they discuss price. What are the variable costs? What are the fixed rates, and what is the overall cost? What is the price of any tangible products? How much does labor cost? Examine the information. Think about how many products or services you need to sell in order to turn a profit. What steps can I take to lower my overall fixed costs? How might the variable expenses per unit be decreased? How can my sales be increased? Avoid going over budget while launching a firm. Recognize the kinds of purchases that are appropriate for your company and refrain from going overboard with ostentatious, brand new equipment that won't advance your objectives. To make sure you are remaining on course, keep an eye on your business spending. Selecting the type of entity your firm is before registering it is necessary. Legally speaking, your business structure influences everything from your tax filing strategy to your personal liabilities in the event of a mishap. Sole proprietorship. If you want to be solely accountable for all debts and responsibilities, and you own the firm on your own, you can apply to be a sole proprietor. You should be aware that taking this path may negatively impact your credit score. Partnership. On the other hand, as the name suggests, a business partnership entails the personal liability of 2 or more individuals as company owners. If you can locate a business partner who possesses abilities that are complementary to yours, you don't have to do it alone. Adding someone to the mix is usually a smart idea if you want your firm to succeed. Limited liability company. The limited liability company, LLC, is one of the most popular business structures for small enterprises. The tax advantages of a partnership are combined with the legal protections of a corporation in this hybrid form. In the end, you have to decide what kind of entity best suits your needs, both now and down the road. Understanding the different legal business formats that are available is crucial. It's a terrific idea to discuss the choice with a business or legal advisor if you're having trouble deciding. Step 3. Register with the IRS and the authorities. Obtaining business licenses is a prerequisite for lawfully operating a business. For instance, you have to register your company with the federal, state, and municipal authorities. Before registering, you need to prepare a few documents. Important papers such as operational agreements or articles of incorporation, DBAs, EINs, income tax returns, and other relevant licenses and permissions should be registered. It's possible that you will put it off until later, but getting the appropriate insurance for your company is a crucial step to do before you formally begin. It can be expensive to deal with situations like theft, property damage, or even a lawsuit from a customer, so you need to make sure you're adequately covered. Most small firms can profit from a few basic insurance plans, even though you should think about numerous types of business insurance. For instance, you will need to get unemployment insurance and workers' compensation if your company employs people. In the event that your company offers services, professional liability insurance might also be necessary. It protects you in the event that you operate your business improperly or fail to take necessary action. Step 4. Build your team. To get your business off the ground, you'll need to find and hire a fantastic team, unless you want to work alone. According to Joe Zawadzki, general partner of Imperium Ventures, business owners should focus just as much on their people as they do on their goods. Managing a company can be very demanding, and you and your group are probably not going to be able to handle everything by yourself. Third-party companies can help with that. Businesses in every sector, including human resources and phone systems, are there to work with you and support you in managing your company more effectively. For instance, you can create an IVR system with a business phone system to direct callers to the appropriate agents automatically. Building your brand and gaining a following of individuals who are eager to leap at the chance to do business with you is more important than actually selling your good or service. Ask your clients and future clients for permission to communicate with them as you develop your brand. Utilizing opt and consent forms is the simplest method for achieving this. According to Dan Edmondson, the founder and CEO of Drawngenuity, these forms let you get in touch with them with further details about your company. The work you have as an entrepreneur doesn't end with your debut and initial sales. You must constantly expand your firm in order to turn a profit and stay afloat. You'll get what you put into your business, but it takes time and effort. One of the best ways to attain expansion in your sector is to partner with more well-known brands. Make contact with other businesses and offer them a free sample of a product or service in exchange for some advertising. To promote your brand, team up with a charitable group and donate some of your products or time. There's never a perfect plan, even though these pointers will help you get your business off the ground and ready to develop. When launching a firm, you want to make sure you've planned everything out perfectly, yet something will almost definitely go wrong. In order to be a successful business owner, you have to be flexible. Do like, comment, and share this video. Subscribe now to watch more informative videos like this. Thanks for watching.